Hello guys, welcome to the market commentary for today. My name is Becky. My email address is down here. It's becky@tradictive.com, and we've also got support@tradictive.com as well. Two places that you can send emails to if you have questions after watching this. Now let me just make sure that the disclaimers are on the top left hand side there of the screen. Please read them, not just for legal reasons, but also to understand what you can expect from these kind of videos. Now you're watching a 3D market commentary, so for those that this might be the first time you're looking at it, let me just explain very briefly what it is. We send out an email every day to our free members that has information on 5 major markets in the world, and it looks at 3 separate elements, looking at statistics and probabilities. So the reason we call it a 3D market commentary is because we send information across these markets on 3 different elements, and we then obviously do this video to expand on that and explain on that email and give it a bit more context. Now I'm just going to quickly show you, before we get into that, I'm just going to quickly show you a place you can go. This is tradewithufos.com/Becky. This is a place you can go in order to ask questions and to get some resources and things that might help you. You can get some apps, some of which are free from this bit here. You can book one-on-one coaching with me there if you want to, and you can log in and you can ask questions in this area, which will enable you to be able to first of all get the answer publicly, but it might be that you scroll down here and you see other questions that people have asked and you already get your answer from there. So by posting your question publicly helps other people later down the line, and like I said, other people might have done you that favor and you might get your answer there anyway. So hopefully that all makes sense. Now I've just realised that my toolbar's at the bottom there and it gets on my nerves when it's in the way, so I'm just going to hide it, just because then we can see the full screen's worth of actual information. So let's do that. Okay, so let me bring up the email that we send out, and of course it's relevant to market data, so we'll have up a chart as well. So as I said, we look at 3 different approaches. So the first thing, 3 different elements in our approach. So the first thing we look at is market climate. Essentially, where are the probabilities? Are the probabilities up, and therefore we should probably look to buy? Are the probabilities down, and therefore we should probably look to sell? Or are the probabilities really in neither direction, in which case we do nothing? Now we use technology to help us with everything, no different here. The way we figure out our market climate is to use an app called AutoClimate. This app down here is called AutoClimate. It's a free app on most platforms you can get it on. And what AutoClimate does is tell us where the probabilities lie. It tells us that through the dots that we see. Ignore the lines and focus on the dots. If we have a thick blue dot, that tells us probability is upwards. If we have a thick red dot, that tells us probability is downwards. If we have a thin dot of either colour, I can't see one of blue now, but a thin dot of either colour tells us not enough probability either way. Doesn't matter about the colour, the fact that it's thin is AutoClimate app's way of telling us not enough probabilities in either direction. So we use this app and we'll look at that per market to figure out where the probabilities lie, up, down or nowhere. Then we want to figure out where are big stacks of buyers and sellers, where are the unfilled orders. By that what we mean is where are buy orders waiting and where are sell orders waiting. We sum that up by calling it a UFO. So we have green UFOs, they show us where the buyers are and it tells us the prices on the right hand side. We have red UFOs, they show us where the sellers are and it tells us the prices on the left hand side, on the right hand side. Now why do we care about this? Because buyers, if there's lots of buyers, they're likely to push price upwards. If there are lots of sellers, they're likely to push price downwards. So we want to know where they are so that if price hits the buyers, we know where price is likely to go up from. If price hits the sellers, we know where price is likely to go down from. So we're going to look at that per market as well. And then we're going to come to market volatility, how quickly we expect these markets to move. So those are the 3 different things that we look at. And we will start with the S&P 500, which is the top 500 US stocks. Oh, that's not what I wanted. I want it under the futures category. So we're looking at the continuous futures contract for these. Essentially, essentially what we're looking at right now is a representation of US stocks. Now each of these markets we're looking at a daily time frame. Of course, different things happen on different time frames. This is relevant to a daily chart, okay? So with the S&P 500, we have a confirmed upwards climate, a thick blue dot there, probability to the upside. We're also right at the start of what would be a normal move to the upside, so room for it to go up. We have buy orders just underneath us at 46.61.5 to 46.25.25. Buy orders beneath us, no sellers above us. So overall probability to the upside here on a daily chart of the S&P. Now, with volatility, we would expect the S&P, the US stock market, to go up or down in 1 year of 16.82%. So in 1 day, that's 49.67 points up or down. In a week would be 109.34 points, and in a month, 227.61 points. So that is the S&P. Now moving on to the next market, we'll look at crude oil. Now as I load it, check out up here about looking to educate yourself. We do a bunch of courses in futures, stocks, forex, backtesting, trading plans and psychology. Most of our courses come with a 3-month complimentary access to the apps. Now AutoClimate, this app here, is a free app on most platforms. You can get it on anyway. AutoUFOs, which show us where the buyers and sellers are, is a paid for subscription model. You can subscribe directly to the app. You don't need to have a course in order to get it. Most of the time though, it is actually cheaper to do it that way, to get a course and the apps together, than it would be to just get the apps. Okay, so let me just squish this down on oil so we can see what's going on. So with oil, we have a confirmed downwards climate, thick red dot, probability to the downside. Now we don't have any sellers close by, but we have buyers, but the buyers are quite far away as well. So the buyers are all the way down here at 71.48 to 69.39. Overall, probability to the downside here with oil, with room for it to continue before buyers might push it back up again. Now, in terms of volatility, we'd expect oil to go up or down in 1 year of 36.1%. So in a day, that's 1.82 points up or down. In a week is 4.01 points, and in a month, 8.35 points. Okay, next market is gold. Now, as I load gold, it says down here about coaching and support. We offer a bunch of coaching and support for free on multiple platforms, so join us on places like Facebook and LinkedIn and YouTube, places like that. We also have a closed coaching community, which is a small monthly fee to have access to more of our time in a closed environment. So check that out if you think that will be helpful. Otherwise, like I said, we do offer a bunch for free anyway. So with gold, we have a confirmed upwards climate, a thick blue dot there, probability upwards. Now we have gone slightly past what's normal in terms of a move to the upside, so bear in mind we are a little bit overextended, but still have probability up. Now we have sellers up here at 1962.5 to 1938.4. We have buyers down here at 1652.8 to 1624.4. And again, we're kind of in the middle there. We're not really close to either stack of orders for them to have any impact today, really. So overall, probability up here coming from the climate. Now, in terms of volatility on gold, we'd expect it to move up or down in 1 year of 16.85%. So in a day, that's 19.8 points up or down. In a week, 43.58 points up or down. And in a month, 90.72 points up or down. So that's gold. Now moving on to the next market, which is the US dollar. Now as I load that, just to say that of course everything we're talking about here is to do with probabilities and statistics. That doesn't mean that it's definite and is 100% going to happen. Nothing's guaranteed in life, and definitely not in the markets. So yes, it might be more probable, but that doesn't mean it's definitely going to happen. We still manage our risk just in case, and we still might add even extra layers on top of this to increase probability if that's what we want to do. So coming back to what we see here, which is the dollar, we have a thick blue dot, probability upwards, confirmed upwards climate, still within what would be a normal move to the upside as well. So probability still to the upside. We have sellers here at 96.145 to 95.675. And we have buyers here at 94.645 to 93.865. And we're kind of in between them. Now the dollar doesn't move very much, so unlikely to hit these stacks of buyers or sellers today. We could, less likely though. Now the reason I say that is because if we look at volatility here, The expected yearly movement up or down for the US dollar is only 6.40%, which compared to all of the other markets that we look at in this session is quite low. So that means each day a movement up or down of 0.36 points. In a week is 0.8 points up or down, and in a month is 1.66 points up or down. And we're less or more than that away in terms of the daily movement from these stacks of buyers and sellers. So unlikely to hit them today based on the volatility. We might, if we hit the buyers, we would expect price to go up from there. If we hit the sellers, we would expect price to go down from there. So we'll see what happens with this. Overall probability still to the upside here with the dollar. Now, last market is backed Bitcoin. Here we go. Let's just load this. So with backed Bitcoin, we have a thick blue dot, probability to the upside, confirmed upwards climate. We have sellers just above us that could get in the way, so be aware of this. These are between 69,000 to 66,642.5. Now we're quite close to these sellers, so if price were to move up and hit these sellers, we'd expect them to push price down. So that could get in the way of this upwards climate at the moment. I would say we've got a kind of fight going on. We've got buyers pushing price up, but we've got sellers just above us. So could be a little fight that goes on. I'd rather keep out of that, see which side wins, and then get on board with that. We have buyers down here at 62,692.5 to 60,947.5. Now, if price were to hit the sellers and come down and hit the buyers, it's likely to go back up from there. The same as if price were to go down and hit the buyers and come up and hit the sellers, it's likely to go down from there. So again, these buy and sell UFOs just help us figure out where price is likely to turn from. At the moment, we have buyers coming in from the climate, sellers just above us, buyers slightly lower down. So overall, I'd say not enough probability or clear probability in either direction at the moment. So just bear that in mind, not clear in one direction or the other. With Bitcoin, we would expect it to move up or down in 1 year of 101.34%. So in a day, that's 4,212.68 points up or down. In a week, it's 9,273.79 points up or down. And in a month, it's 19,304.94 points up or down. So that's what we'd expect in terms of movement on Bitcoin. Now, for each of these markets, what we've done is we've looked at market climate using the Auto Climate free app on most platforms you can get it on, which told us where the probabilities laid. Did we have a thick blue dot and therefore probability upwards? Did we have a thick red dot and therefore probability downwards? Or did we have a thin dot and therefore probability neither way? We then looked at buy and sell UFOs using buy orders and sell orders that are highlighted to us by this app to figure out where price might be pushed up or down from. And then we looked at volatility, how quickly we expect these markets to go up or down. So that's the last market. We've now looked at each of those 5. Now, one more thing before we round up is to look at our weekly economic calendar. This comes from fxstreet.com, and we filter by high impact news. Essentially what we're filtering for here are what are these scheduled news reports that are coming out that are likely to create an impact on the markets and increase that volatility, make them move quicker. So today, being Monday, we have Revolution Day in Mexico that could affect Mexican markets. We have Independence of Cartagena in Colombia, I want to say. And we have the Euro, that we've had a speech come out on the Euro so far this morning. Now we also have report hearings coming out in the UK, and we have Australian news coming out later on in the day. Basically, if you trade any one of those markets or any one of those currencies or markets in those countries, be aware that we might have news today that could impact them. If you have any questions, you can email me, or preferably you'd go to tradewithufos.com/Becky. From here, you can get apps if you want to get them directly from here. You can book one-on-one coaching if you'd like to. And you can also come down here and ask a question in a public space once you've logged in. And then other people can see the questions. And then when we answer them, other people can see the answer as well. So we all learn from this area. Hopefully this has made sense. Please let us know if not. I will be back on Thursday for the next one. Oh wait, no I won't, not this week. I'll be back next week for the next one. So see you guys then. We'll have sessions coming up during the week as well. My colleague Boyan will be taking this session Tuesday and Wednesday. So he'll see you there. And again, reach out if you need anything.